Welcome back. Now, it's a challenging start to the year for the manufacturing sector. The Absa January PMI is back in negative territory, having plummeted from 50.9 in December to 43.6 index a point. This due to a sharp decline in demand and activity during the period. Sello Sekele, who's economist at Absa CIB, joins us to unpack the index in greater detail and what it suggests for the industry moving forward. Sello, thank you for your time today and good afternoon.
Good afternoon, and thanks for having me.
Well, that's not the best start to the year, is it? Very puzzling, I would say, to think that December we would have seen the amount really breach that 50 neutral mark and then to drop so low. Before we get into the sub-indices, just help us shed light on the overall index.
Yeah, so as you said, tough start for manufacturers to 2024. The PMI fell to levels that we saw in hard lockdowns of 2020. So it goes to show that manufacturers are experiencing difficult times at the start of this year.
Let's head into some of these sub-indices here. Activity, business activity, as well as new sales order. They really took a knock here. I don't think I've seen them at levels this low. And of course, we are making a comparison here to pandemic times. But what is driving this low business activity in the month of January? Is it also that January is seen as a month of being cash-strapped?
Yeah, so the numbers that you're looking at there, they are seasonally adjusted. So there's no seasonality,
okay,
right? So the cash-strapped story is out of the window. But what we see here is that output declined as a result of subdued demand. And interestingly, when you look at demand, manufacturers say that demand, from other parts of the world have been quite low. And in fact, there was a comment that says that demand is unusually low. So it looks like it's more of a demand story that's feeding into output performances.
And that demand story, Sello, is that demand within the manufacturing sector, considering how, interlinked it all is? But is it also with players like wholesalers and retailers also, demand being low at that end?
Yeah, so you touched on very good points and very good points. So the manufacturing sector has backward and forward linkages, right? So what it tells you is that demand in both directions is quite low, and also what it also tells you is that our major export markets are not demanding as much as manufacturers would like.
And just so we're clear, the ports issue has nothing to do with this?
So the ports issue seems to actually be affecting the PMI still. So when you look at the supply delivery times, right, that index came down a bit, which suggests two things to us. The first is the port situation, the disruptions there are getting a bit better. And two, demand is lacking. Therefore, supply delivery times are getting shorter and shorter. So there's another index there, right, that talks to the port issue, which is, your inventories. It looks like your inventories also declined, which shows that maybe manufacturers were not able to source inputs as quick as they would like.
Let's also touch on what we're seeing with pricing. This is a bit of a complex one as well, right? We are seeing inflation falling. I'm wondering if that is reflective in the index and might be the only green shoot in the numbers right now.
Yeah, so in terms of prices, you can see that the index ticked up a bit. So what we think there is that it's mainly of a reflection of the weaker exchange rate that we saw in Jan, as well as stronger Brent crude oil prices. And in fact, if you look at the Central Energy Fund data, they are also suggesting something like that, we are likely to see another petrol price and diesel price increases in the month of February, precisely because of the weak exchange rate in Jan, as well as stronger than expected Brent crude oil prices.
With that said, Sello, we are seeing expected business conditions in 6 months upbeat, rising to 58.7 from 57.9, which tells me that, manufacturers they're in the doldrums, I guess, in terms of sentiment, but they are expecting that in 6 months things will be better. What would be better in 6 months?
So what's interesting here is that you should look at it in two perspectives, right? The first is normally in January, you tend to see that index rising. So what it says to us is that manufacturers are hopeful for the year ahead, or 6 months' time, as you say. But another perspective, especially in this PMI, is that they are probably looking at the current business conditions, right? And they're like, surely going forward, it cannot be as bad as it is right now. So they are comparing it to a very low base. As the PMI suggests. So that number, you need to take it with a pinch of salt. I don't think that much is going to change in a direction that propels that index so high as we saw in Jan.
Fantastic. All we have time for today. Thank you so much for chatting to us, Sello. Always a pleasure. Wonderful. That was Sello Sekele. He's economist at Absa CIB.